bring up SE if you could. I had some questions for you I thought would be interesting today, relevant based on what's happening here in the marketplace. Obviously, we're getting a nice little bounce. And it's how do you update your plan that you had coming into the week as the chart changes and develops? And this was one from a report over the weekend. How do you change it? Because Tyler, this one, high base setup, waiting for a breakout. Breakout didn't happen. Alpha 9 pattern didn't hold. It then retraced, but then it created this beautiful retracement. And now we're getting confirmation. What do you do here? Like, how do you update your trigger and your plan?
Yeah. Well, the first thing to realize is when we meet over the weekend to look for quality setups, we're looking for something that we think is going to trigger in the next couple of days. Otherwise, we could throw crap on there that just maybe won't trigger forever. So the rule of thumb is you're only going to get a stock on the report that is close to a trigger point. Recognize that you're in control of finding good setups, finding good stocks, putting yourself in a position where if it triggers, you can play. But nobody here can predict when a stock is going to trigger, the day of. You do your best, but sometimes you don't know. Okay. And so when the market opens on Monday, we come back from the weekend, a lot of those stocks that looked gorgeous on Friday, the world may completely change on Monday. So you do have to be able to adapt and differentiate between a pattern that looked good and now looks terrible and should be completely off the list versus a pattern that still looks good, but it's just changed a little bit. And so in the case of SE, what we have really is one bullish pattern that morphed to a different bullish pattern. And to Tim's point, yeah, the idea here was this is a nice uptrend. It's consolidating, basing sideways. We like it on a breakout. It never really broke out unless you had, Tim, to be fair, if you had a super tight entry, I could potentially see somebody having gotten snookered in on Monday morning on the up gap. Assuming they didn't, after Monday, nothing changed. You just had one more down bar in the context of a base. I'm still looking to buy a breakout over the high. Really, the story changed when you saw this 2-bar pullback here, right? So a potential breakout became a retracement. Then the question is, do you like the retracement? Is this a clean enough pullback pattern where you could buy the bounce? What I think what made this one a little bit tricky, Tim, is you had some pretty big bars, especially yesterday. On the entire market, you had big bars yesterday. So that was just the way it was. And that makes it tricky, Tim, to know, do I want to place an entry off of this big bar? Do I want to wait one more day? If the market was generous, it would have given us a doji candle today or a small bodied candle and then triggered tomorrow, which would have been easier to get in. As it played out, today, Tim, the thing's up 10.5%, took out yesterday's high. This is a tricky one for me personally, Tim, because of the size of the daily candle. This is the situation where if you liked SE, you wanted to buy the dip, I might have looked at an intraday chart and taken a closer look at yesterday's candle to see if there was a quicker entry point, sooner than breaking the high. But regardless of where your trigger was, if you were looking to buy the dip in SE, it did trigger today by any measure. And yeah, here's a situation where, look, the pattern morphed. And if you had updated things and changed your triggers, then I think you could have got in today.
Mm-hmm, mm-hmm. Same thing. I mean, we looked at the stock earlier in the show, but like Goldman Sachs, it's a little different situation because it was on a retracement. We were just waiting for the confirmation we were looking for. Didn't get it early in the week. It kept fading. We were just failing confirmation intraday as well as day by day, but then boom, 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 coming to the Wednesday sell-off. Now Thursday, now you're getting confirmation here, on retracement setups as it's becoming deeper and deeper and deeper. Like how deep is too far? This one's not, obviously. This one's still a very, very beautiful retracement, but do you just kind of just keep watching the candles? Like how do you update that part of it?
So yeah, this one was a lot easier because it never triggered, all right? I mean, here's the thing. When you're trading a retracement, it's like, when do you put in your buy order? The answer is once it's pulled back enough where you like the risk reward, and if it does trigger, you want to be in. If you don't do that, then you could miss it. So maybe a stock pulls back 4 days, and I'm like, okay, I looked at the setup with this 4-day pullback. If it goes up on the 5th day, I want to buy it. Then put your order in on the 4th day. But on the fifth day, if it doesn't trigger and it comes down again and again and again and again, you have to update your trigger. So, Tim, the reality is after Monday, we were looking to trigger over Friday's high. After Monday, you say, well, I still like the setup, but now I could buy over Monday's high if it goes up on Tuesday. Well, it didn't. It went down again. And after yesterday, if you said, well, I still like the setup, then your trigger might have been over yesterday's high and it triggered this morning. So I think you just have to follow it bar by bar. And if the overall pattern is still intact, you just update the entry. And then when it pivots and turns, you're in. The other thing that I think is a little bit tricky and subjective is, well, how much of a pullback is too much? If I liked it when it was down 4 days, what if it ends up pulling back 6 or 7 or 8 days? Is there a point at which it's now, no longer a good uptrend or too weak of a or too strong of a pullback? And opinions will vary on that. I mean, certainly for me, if it pulls back below the 50-day moving average, I'm usually no longer considering that as a classic bull retracement. I think that's something we could probably all agree on as a 50-day. It might also depend on if there's prior pivots. If we're breaking prior pivot lows, whether we're below the 50-day or not, that is a sign of caution for me. The interesting thing with Goldman, last point here, is it rallied so much, it came so far off of the 20-day moving average and its old support that it had the room for a deeper pullback without threatening the integrity of the overall uptrend. That is why I think this was still a viable dip. We could find other examples where this would have been too much of a pullback and it would have soured my outlook. But in this case, I think it's still in play.